Nú langar mig að bjóða velkomin Kelly Driscoll, framkvæmdastjóra á greiningasviði hjá CRU. Hann ætlar að fjalla horfur í áliðnaðinum. Mr. Driscoll, welcome. We are all ears.
Thank you, Minister, ladies and gentlemen. Thank you for having me here. For those of you who are unfamiliar with CRU, CRU is a world-leading provider of market analysis and strategic consultancy to the mining and metals industry. I'm going to speak to you today about my speech is called From Abundance to Shortage, so short-term pain for long-term gain. The structure of my presentation, I'll talk about the challenges that the aluminium industry has faced and is facing at the moment. I'll move on to look at demand for aluminium, and then supply and the balances, the market balances, which leads on to price trends and conclusions. So it's quite an interesting story. If you look at aluminium, it has faced a lot of challenges. But if we look back to 2000, and we've set the demand in 2000 at 100 for aluminium and most of its competing materials, and you see that aluminium has had the fastest demand growth of all these materials over the past 13 years. However, if we look at the chart on the right, its price has lagged below all of these materials. So that's where the real challenge lies. It's not in the demand. The demand for aluminium is very strong and will continue to be strong. But the difficulty for the industry has been the price, and I'd like to try to explain a little bit about that. So if we look at this, these are some of the key influencers of the price for metals and for iron. That's for iron ore. Obviously, mining is a key part of it, and for copper and iron ore, mining is a big part of the value that's added into the material. For aluminium, although bauxite prices are rising at the moment, bauxite is relatively low value mineral and does not contribute significantly to the value. If we look at lead times for building new copper mines or iron ore mines are really quite long, and with the abundance of bauxite around the world, the lead times for building mines is not that long. Likewise, the lead time for building smelters, I mean the technology used for aluminium smelters is reasonably similar to that was in use 100 years ago. Obviously, it's improved and the efficiency is improved, but it's essentially the same technology. Whereas if you look, for instance, at copper and base metals, the technologies are changing quite significantly. Every generation, there's different technologies. And it's the same with supply constraints. Copper and iron ore have seen quite significant supply constraints, especially as demand has grown in China and in the developing economies. Aluminium hasn't experienced the supply constraints that these others have, and hence it's not worked in aluminium's the favor of aluminium price. But China, I suppose, is the biggest influence for aluminium and for aluminium remaining in this challenging state on the price. China has grown, over the past 15 years, China has grown from about 5% of the aluminium market to about 50%. China now produces and consumes about 50% of the world's aluminium. And China has been guilty of overbuilding and overproducing this metal to the detriment of the global aluminium price. So if we look at this chart, this is quite a simplistic chart, but what it shows in green is the world consumption of aluminium over the past 8 or 9 years, and in the black is the world production. So what we've seen is the global market for primary aluminium, it didn't really correct adequately during the global financial crisis. And for 7 years in a row, the industry has experienced surpluses. Obviously, the surpluses were the greatest back in 2008 and 2009, but the industry has continued to overproduce for 7 years in a row. Well, why is that? Part of it is because in the recovery in 2010 and 11, prices rose perhaps higher than they should have. And part of it was because during the downturn, the investors were looking for safe places to invest their money. There were significant aluminium stocks that built up, and so aluminium stock financing became quite a popular way of investing money. It achieved better returns than the investors could get elsewhere. So as a result, a lot of this overproduced aluminium was being tied up in stocks and wasn't being let out onto the market, so that pushed prices up. But since then, the last 3 years have been quite a struggle for the industry. And so as I was saying before, the aluminium industry is kind of split now between China and the rest of the world. So if we look at production in the world excluding China, we see that over the past 3 years, there's been quite a bit of discipline in the industry. We've seen over the past 3 years about nearly 3 million tons, 2.9 million tons of closures of primary aluminium smelting capacity that's closed. And this responsibility has been shared amongst almost all of the major producers. Obviously, we see here UC Rusal and Alcoa have seen the biggest share of the closures, but they are also the biggest players on the market. So this is a part of the good story, that the industry, although it has suffered, it struggled with low prices, it's now responding, it's being disciplined, and it's closing down high cost production capacity. Utilization rates are still reasonably low for the industry at about 80%. It's the industry that normally operates at 90 to 92% comfort zone. But our view is that a significant amount of this capacity that has closed is likely to continue to stay closed forever. It's not temporarily idle, but permanently. So now if we shift from the world ex-China to China, we're seeing that China is also correcting, but not nearly as fast as it needs to. So on the right-hand chart, we see about 3.5 million tons of closures in China. So that's more than in the rest of the world. But if we look at the left-hand chart, we see very significant capacity growth continuing in China. China is likely to build nearly 12 million tons of new smelting capacity between now and 2018. And at the same time, we'll continue to close, and we foresee about 4 million tons of additional capacity closing in China. And the rapid growth is as the Chinese industry moves to the northwest provinces, especially Xinjiang, where there's an abundance of coal, and they can get cheap. For China, can get relatively cheap energy, and that's the energy prices. Electricity prices are the main hindrance to China for continuing to operate at the sustained levels that they've operated. And in fact, if you look at the average power price for an aluminium smelter in China, that's double what it is in the rest of the world on average. And it has been that way for the past decade or so, and it will continue to be so. So moving on to look at the demand outlook, I'll say thanks to Rio Tinto for this slide. They showed this in their annual report a couple of years ago. And what this shows is across the bottom, as GDP per capita grows in the country, that its expenditure for these different minerals and commodities, it shows how expenditure increases. But for most of these, they tend to plateau at a certain level. But aluminium, as we see, rises much higher. And in fact, so far, we haven't really seen a plateau in any country in terms of aluminium consumption as its GDP grows. And so we see where the world is on average in 2011 and where we expect it to be in 2025. So as Gerd was saying before me, the demand picture for aluminium is very, very strong. And if we look at the demand picture, this donut chart here shows that the demand, the various end uses of aluminium are exceedingly varied, and can be split up in at least these six different categories. And this is one of its strengths. If you look at steel, nearly 90% of steel is used in the construction industry. If you look at copper, nearly 90% of copper is used in the electrical industry or conducting wires. And so, but aluminium has a very broad demand base. And if you look at total aluminium consumption, last year it was about 70 million tons of aluminium. And we see over 40 million tons of growth over the next 10 years. I have a picture here of a Ford F-150 pickup truck. This is going to be one of the major new mass production vehicles that uses aluminium sheet. I'll talk about this a little bit later, but it's one of the big success stories for aluminium. And so on this slide, what I'm showing is total aluminium. We have to remember that of the total aluminium, about 30% of that is recycled material, and about 70% of it is primary metal that comes from the smelters. So in this slide, what I'm showing is the primary demand. And so primary demand last year is about 50 million tons, and we see about 40 million tons of growth between now and 2035. And the growth will be, well, the growth that we're seeing right now is really in the OECD countries, the main developed countries. And in fact, if you look at the OECD growth for aluminium over the next 5 years, the growth rates are even higher than we saw in the period 2000 to 2007, leading up to the global financial crisis. So that's very good news indeed. But the main growth, and especially beyond the next couple of years, the main growth is going to be in developing economies. We see India, the Middle East, Southeast Asia, and South America really as what's driving the growth. And many of you will be surprised to see here China is actually going to be below the average in terms of average growth rates over the next few years. But that's just because China is already consuming so much. And I think if we look at the next slide here, this is a slide that shows specific consumption of aluminium. It's kilograms of primary aluminium per capita. And obviously we see that huge number for China. So the average consumption around the world is about 7.3 kilograms per person. China is already up there near 20. And so China will continue to grow and probably exceed 30 kilos. This is primary metal only. And then start to tail off, because by the middle of the next decade or by the end of next decade, much of the infrastructure that China has built using aluminium is going to come back into the recycling stream. And in fact, China's demand for primary metal will start to decline as it has more and more recycled material available. We see, longer term, we'll probably see the peak of demand from the developed economies, North America, Europe, Japan, and then we're very, very likely to see the growth in India. And so on the previous chart, we saw India at the top here at about 8% cumulative average growth rate, and from here it's down at about 1 kilo, and we see that increasing by 4 or 5-fold over the next 20 years. And I mentioned briefly before about automotive use, and obviously we're going to hear a lot more of it in our next presentation. But that is a big success story for aluminium. Automotive body sheets, we see demand growing very strongly, in fact, increasing about 8-fold over the next 10 years. Europe is the clear leader in the use of aluminium body sheet at the moment, but that's likely to be supplanted by North American use over the next few years as it moves towards the mass production vehicles. Moving on to the supply and demand scenario, I think this is probably one of the key slides here. Is we see as I mentioned before, we've had 7 years of surpluses building up in the world. 2014 finally is likely to see a very slight deficit, but that deficit is split. You've got the world ex-China, which has actually been in deficit for a couple of years, and you've got China, which is in surplus. And in fact, going out for the next 4 or 5 years, China will continue to be in surplus, and the deficit in the world outside of China will continue to grow. But you know, the combined total there will be deficit, and the important thing is that will start to bring down the level of stocks. So the excess stocks that the industry has now, which is close to about 90-day consumption level. In fact, now back 2 years ago, or at the beginning of 2011, it was up over 100 days. The industry, its comfort zone for day stocks is probably around 55 to 60 days. And we can see here, we don't really expect to get to that comfort zone level until about 2018. So our view is that the industry is being disciplined now. It's closing down its excess capacity, and that discipline needs to continue in order to use down to draw down on those stocks and to get the balances to where the price will start to pick up. But we see, you know, as we see the world, excluding China, continuing to grow in deficit, by about 2018, it will obviously need to start to invest in new capacity, because in addition to the closures that we're seeing, we're also seeing projects being delayed or pushed back. And looking at the capacity the smelting capacity that will be needed in the world outside of China, you know, we see a lot of opportunities, a lot of them in northern climates, in Canada, in Iceland, in Siberia, but also a lot of opportunities in the Middle East, in India. But beyond there, it's really difficult to see, because beyond about, I mean, if all of the realistic projects that we can foresee now are built beyond about 2022, 23, there's a huge need for new smelting capacity at about 600,000 tons per year. So that's one large smelter or two medium-sized smelters will need to be built outside of China every year. You know, basically every year beyond, you know, the early 20s, and so it's these opportunity regions where we might see those built. And if we look at where CRU sees the net increases over the next 10 years, obviously China is where we're still going to see considerable growth, because you know, about 16.5 million tons of new smelting capacity, and more than half of that will be in Xinjiang province. But outside of that, we see about 9.5 million tons of new capacity in the Gulf region, in Russia and India, Canada, Indonesia, and Iceland. We do think there'll be more capacity built in Iceland. But with China building over 16 million tons of new capacity and the rest of the world 9.5, does that mean China is going to be a major supplier of aluminium to the rest of the world? Well, no, we don't see that, because China's demand growth is growing that high that it's nearly keeping up pace with its primary production growth. The main problem in China is that their costs continue to rise. As I said before, power costs are about double those in the rest of the world. Also, the Chinese government recognizes that there is overcapacity, and it's implementing measures, and it has implemented measures over a number of years in order to close that capacity. Some of that is based on closing outdated technology. Some is based on closing inefficient or polluting technologies, and is gradually being successful. And the third thing is access to bauxite. China, in general, likes to be very self-sufficient in all of its raw materials, but what it lacks is bauxite. It's importing about 40 million tons of bauxite a year at the moment, and we see that rising going forward. And its access to bauxite. Three-quarters of the bauxite that China consumed last year from outside of China came from Indonesia. Indonesia's imposed a bauxite ban, and as a result, China will be struggling to feed itself with the necessary imports of bauxite. Moving on to price trends. So what I have here is the dotted line here shows the long run trend price for aluminium, and it's shown in real terms, in real 2013 dollars. So we can see that over the past 40 years, the real price of aluminium has tended to be a very, very slight downward trend. And then the other line indicates the metal price, the historical metal price, and where we see metal prices going forward. And so we can see right now we're down at a very low point in the metal price. But going forward, we see quite, as the industry maintains this discipline, that should be quite positive for the metal price. But it's not until the metal price gets above the long-run trend price that there's the incentive to build new capacity. And so we don't see that happening until about 2017. And so by the end of this decade, we'll start to see the investments that required that the industry needs to take place. But the good thing is that over the next 5 to 7 years, that should be very positive for the aluminium price. Another thing I wanted to look at was there a correlation between the LME price and premiums? And these are ingot premiums. So this is remelt ingot, and what I'm showing here, again, it's set back at 1999 being 100 with the aluminium price and the premium, and we see that over about 10 years and even before that, the premiums tended to trend with the aluminium price. As the price rose, the premium would rise, but we saw quite a significant disconnect at the beginning of 2011, and this was very much linked in with the overcapacity that was, or overproduction that happened during the global financial crisis, and then the metal being tied up in stock financing deals. And as it was tied up in these deals, it wasn't available to the end users, and that started to push up the price. So if we look more closely at the last couple of years, what I have here then is in the red is the LME cash price, and then in the blue is the ingot premium, and that premium has continued to rise and continue to rise. So over many years, it was comfortable around $100 above the LME price. During that period, 2010-11, it was about $200. Last year, it was about $300 over, and now it's approaching $400 a ton over the price. And there's a whole variety of factors tied up in that, but the main thing is that the metal is tied up in financing deals, is difficult to get access to, and we see that probably peaking right about now and likely to unwind over time. So the important story here is that the metal price received by the primary producer is not just the LME price, which we can see is fairly low, but the LME price plus the premium, and so that's another $400 above where the LME price is right now. And we see going forward, the LME price will rise, the premiums will come down, but the combined number will continue to rise. So in summary, aluminium is for the long term. The demand picture has always been great and will continue to be great. The stock overhang that we're seeing right now must be drawn down, and we see the industry is disciplined enough that it is drawing that down. New capacity will be needed, not in the next few years, but beyond that, and significant new capacity will be needed outside of China, so the challenge is where that new capacity will be installed. Thank you.